Ira Epstein with your morning flash update, and this update is for the morning of Wednesday, and we're at the 22nd of February, 2023, about 8:40 a.m. Central Time. A little bit of an update in the stock market after a huge decline yesterday. And you know what was interesting in yesterday's decline? No attempt by the naysayers to bid the market up in the second part of the day. So it looks like they've thrown in the towel and accepting the fact that there's going to be, so far, about 3 rate hikes, possibly, each of a quarter. Could be one of 50 points, one of 25, don't know for certain. But that seems to be where we're going, obviously, unless the economic data all of a sudden shifts and gets weak. But at this point, no. And the question today, and today's a huge day, at 1 o'clock today, and let's go to this and we'll come right back here. At 1 today, I'll come right here. We get the minutes from the last Fed meeting. Now, we saw Ms. Mester and Mr. Bullard come out, and they were 50-point advocates, but they don't vote. What about the voting members? What did they say in that? Where's the pressure on the Fed? Because the economic data is red hot. You see that. The economy's doing better on so many fronts. Now, the area it doesn't do better on is right here, the mortgage markets. And why? Because interest rates. We're back up as of the 17th. We hit about 6.66% on 30-year fixed. They're a bit higher because rates have been climbing since then. But that took down the money mortgage market index 13%, the purchase index down 18%, and the refi. Why are people doing that? They're rate sensitive. They're not going to go there. There was an article, in fact, today in Miami that housing sales are falling, but prices are going higher. Well, that's what I'm trying to explain to people as we go into our reports here. That one of the things you have to understand is the law of supply and demand. Demand fades away. It doesn't mean that supply has to do anything to meet that demand. It can sit still if the market is well financed and it just waits. And in Miami, I can tell you that's one of the things going on. It's a red hot market. People are waiting. Now, some of these markets are so expensive, you know, people don't care about mortgages either. You got to take everything into account. Los Angeles, Miami today, you go there, you know, $15 million homes, $20 million homes, $100 million homes. That is not for the average person. I certainly, you know, I live there. I can relate to it. I've been in them. My jaw drops. I couldn't afford them. It's that simple. I mean, that is just something that's insane. Nor would I want to afford it, in all honesty. You've got to be so rich that the money just doesn't matter. And most of those people, never forget this, that's not necessarily their main residence. They have other homes. They are in that stratosphere. But for the average person, it's still expensive in cities, and you've got to pay attention to that. Now, as I said, we'll be watching all day for 1 o'clock. Today is a wake-up call for what's going to happen in the interest rate sector. What's the Fed going to do? That is not being lost on the energies, which are saying, hey, if interest rates keep going up, what's that going to do to our demand? I want to see crude fall to the $70 area so that our president can initiate the buyback of our SPR. I believe that in the second half of this year, not the first half, the second half, got to get through the summer. The second half, once we're through selling that SPR that they are going to be releasing, the strategic reserve oil, that things will improve and will be on the road back up. I just read a report where I think it's Morgan Stanley's now looking for $95 in the second part of the year. Bonds and notes, now it's going to be short covering in front of the report. All you've been doing is falling. Copper giving back a little bit of the gain that it made yesterday. Come on, it went up, what, 11, 12 cents, so it's giving back about a third of that. Silver backing off against gold one more time, and you've got to keep your eye on the dollar. The dollar has not yet said, I agree that interest rates are going sharply higher. Not doing that. The market is sort of stalled right here. It's been laboring to come up. Yes, the 102 area is a little cheap, but anything around this 104 is proving to be a little expensive near term. Now, one of the things that I did yesterday, and it didn't work initially, we had it working when we put it up, was my individual stock report. You went in and you might not have seen the report. We're working on it right now. It'll be up probably by the time you see this. What I did is I decided to go after the headline chart, Walmart. Walmart yesterday, a monster story. Yes, one part of it not good, the other part very good, but it's the big retailer. What is it going to mean? So I did the price counts. They'll not be seasonal charts. You don't do that on stocks like this. But we'll talk about Walmart. I'll get to the other retailers as well. Wanted to get the first one out. Then we'll cover Meta, Google, Apple in different reports, ARK, Netflix, and the hot stocks of the day. I'm going to be doing that on a regular basis now, so you'll be able to see what they look like. They'll typically have a price count. They'll have weekly charts, daily charts, earnings if they've just come out, and that's what I like to tie these two off. And obviously, I'm not going to just wait for earnings reports, but I'll often do that and give you a synopsis of what is going on. So this is out on the website. All you have to do is go to our website at iraepstein.com. Under the word research, you can click up here at any time. You'll see an icon. Give it a click. It'll take you right to that area. And if you have troubles, just call our staff. We know what we did. My IT department's working on it. They'll have it resolved for you in a moment. I'm Ira Epstein. You have a good day.